Wild start to the year. All right. Well, happy Friday, everyone. Rich Swerbinsky with the Mortgage Collaborative here once again with the rundown with Rob and Rich, where we take you into the weekend by rolling through all the latest and greatest with the mortgage industry. This week, my normally esteemed colleague and co-host, Rob Chrisman, unavoidably detained, had a family commitment. So went to the well to procure an all-star team of correspondents on all the most critical issues going on right now in housing and housing finance. And I'll start out by introducing them, and really pleased to be joined today by a gentleman that spoke in person as one of our keynote speakers at TMC Miami about 6 weeks ago, the president and CEO of the National Association of Home Builders, Jerry Howard. Jerry, great to see you again.
Thanks for having me. Good to be back.
Really looking forward to getting your perspective on everything going on right now with the Home Building Association and industry, housing more broadly, and looking forward to getting into that discussion. And then a couple TMC network favorites, the president of Nationwide Mortgage Bankers out of New York, but a fellow Clevelander, Jody Hall. Jody, great to see you again.
Hi, thanks for having me.
You got to show everybody your shirt, your hoodie.
Oh, for sure. Cleveland strong, but you notice I won't change. Like, I can't buy the new gear. Not yet.
And with the Federal Reserve this week, coming out and speaking at the end of their 2-day policy meeting and ultimately sending the financial markets into complete tumult, which I think they actually were trying to do the exact opposite. We wanted to bring in one of our cap markets subject matter experts, the executive vice president of capital markets for Princeton Mortgage, Victoria DeLuce. Vic, great to see you.
Great to see you guys. Thank you so much for having me.
All right. Well, let's get into it. And as always, any comments, questions, thoughts, strive for interactivity with the show. Please feel free to pump them into the chat or the Q&A, and we will incorporate them into the show. Jody, I'm going to start with you because there was just a huge acquisition in the mortgage industry this week. I think the biggest vendor-to-vendor acquisition ever in the mortgage industry, $13.1 billion. The ICE machine acquires or announces an agreement to acquire Black Knight Financial Services. Your just initial thoughts on the news this week?
I'm not really sure how it goes through, but I mean, I think everything that I might have tried to learn when I was in college is that that's a monopoly, maybe. So I'm not sure what will happen, if it will come to fruition. If it does, I actually, for what we're trying to accomplish, see it as an advantage, because I think that there are some diehard Encompass users that aren't going to want to have Empower as their loan origination system. There's some Empower users that are on Empower because they don't want to use Encompass. And I know that the initial conversation is that they will run the two companies in parallel from the LOS perspective, that they will run both companies. But from a long-term perspective, how long can you do that and actually be profitable? So I think that the inevitable is you get a blended product. I do find it interesting that they think one thinks that the other has better technology, and I think both of their technology is old. So I think it's going to be interesting to see, what comes to fruition, but I do think that there's going to be a lot of Empower users who are going to want to get out. I also think there's a lot of Encompass users who want to get out. The part is the pieces that come along with with Black Knight, and being that they acquired Optimal Blue. So now ICE has EPPS and Optimal Blue for pricing engine perspective. And I think that the pieces that go along with that, it's going to be interesting to see if you still have the same flexibility that we have had in the past when you are a Encompass user, being able to do integrations. Do they stop allowing integrations? They have both platforms. So I think that I don't think anything's going to happen immediately, but I think, 2-3 years from now that things are going to look completely different on the ice front. And I don't think that they're going to continue to run two systems separately, but I guess I would have liked to have been part of that. I didn't own
Never
any
sold a
piece.
company for 13 billion before?
No,
Yeah.
no, nor even 13 million.
Well,
Jody,
certainly
to
big-
More power to them.
I'm sorry, Vic, go
Jody,
ahead.
I was going to say, Jody, to your point about running two companies simultaneously, I think that we already have a look into the future when Black Knight acquired Optimal Blue, but also acquired Compass Analytics. And they ran those two companies side by side for quite a while. And now they are actually in the process of merging them both. And they're coming out with a new product where they've leveraged both technologies. So we'll see how great that is when that comes out. And I think that will be a telltale sign of how they're probably going to handle the LOS and the pricing engines as well.
Right.
Certainly, if it goes through the end of a successful run for Black Knight, the biggest loan servicing software provider in the mortgage industry, and the end of a run where they've had this strategy of growth by acquisition and acquired some well-regarded companies, Compass Analytics and Optimal Blue and Surefire and like 5 others, and then just sold to ICE at the equivalent of about $85, $86 a share. Their stock was trading at like $71, $72 a share. So if it goes through, a success story for Black Knight. But to Jody's point, a long road to hoe here. By the admission of both companies, this is going to be an acquisition that takes a long time to go through. I think I read publicly a year is the best case kind of scenario to get this thing done. And certainly to face some antitrust scrutiny, just given, Black Knight's market share on the servicing side, and the two organizations combined market share on the loan origination side. But news that got everybody's attention in the industry and directly impacts a lot of people. Because Jody, to your point, there's a lot of lenders right now, either on Encompass that we're pondering going to Empower, or, that are Encompass users that maybe didn't want to be involved with Black Knight. So it'd be interesting to see how all the chips fall here.
Yep, for sure.
Moving on, the other big news of the week, the Federal Reserve had their latest policy meeting this week. And at the conclusion of that meeting on Wednesday, it did what most expected, raising rates 50 basis points. And then Jerome Powell, the Fed chairman, in his press conference afterwards made really positive comments. It was something along the lines of he felt like there was a very good chance of a soft landing after really rhetoric that was very opposite the last couple of meetings, almost trying to prepare Americans for what could be a really tough road to hoe. Since then, the stock market has completely collapsed. Mortgage rates have shot through the roof. So I think he was trying to calm the markets with those statements. And then Wednesday afternoon, it seemed like that was working. Stocks rallied, mortgage rates came down, and mortgage bonds rallied. And then Thursday, Friday, just all hell broke loose. Stocks, bonds just trashed historically. Stocks and bonds trade opposite of one another. This whole weird pandemic cycle, we've seen them in a lot of cases, including this week, trading identically. Vic, you got to be ready for a cocktail at the end of this week.
I feel like I'm ready for a cocktail after the last 2 years, because I feel like I've experienced 3 once in a lifetime events in the last 2 years. So I feel like this is just icing on the cake. But the one thing that I will say is I think that one of the things that we needed as a market was a little bit more certainty over the last few months, especially since the beginning of the Russian-Ukraine war. And we have Fed presidents coming out, one more hawkish than the other. And, the market's getting driven up because there's so much uncertainty and we don't know we weren't super clear on where the Fed was going and how fast they were going to raise rates. And I think you're absolutely right. I think Jerome Powell did us a huge service by taking that 75 basis points off the table, at least for the next 2 meetings, and creating a little bit more certainty in the market. But again, we still have a few things going on. We've still got, China in COVID lockdown, which is going to continue to lend to supply chain issues, which could lend to inflation. And I know that Jerome Powell mentioned that they were going to keep a close eye on that as well. But I think there's still a little bit of uncertainty in the market, and we'll see how it goes. I just took a look at some stats over the last 3 months. We've lost about 5 points in the bond market, in the UMBS market, which has contributed to about a 2-point increase in interest rates. And so when you look at the Freddie Mac weekly survey, it's gone up about 2 points over the last 3 months. But that survey, it's a little bit delayed, but also it pulls in all production channels. So we're talking about wholesale, retail, consumer direct, and it brings in those average rates. I know a lot of people on this call are IMBs, right? IMBs that have retail loan officers that are belly to belly to realtors, and their rates tend to be a little bit higher because they get paid a little bit more to bring in the business. And what we've seen with rates for them, like right now, the average par rate for a typical retail loan officer is somewhere between 5.75 and 6%.
That's great.
Like, when did you think we were going to see a 6% interest rate? Considering just 3 months ago, it was about 3.5 to 3.75.
Most of the economist projections were like, the slow ascent to 4.5% this year. Like,
Well,
right,
in the
6%.
MBA, yeah, the MBA is actually still projecting that we're going to end the year just below 5%. I mean, a lot of experts are still saying that they believe that we are close to seeing inflation peak. I'm not exactly sure how they're coming up with that, but the articles that I read after the Fed announcement, Charles Schwab and a few others were coming out saying that they pretty much guaranteed another 50 basis point rate hike, but we may not see as many rate hikes if we see inflation start to peak. We'll see how that goes, but try telling the loan officer with a 6% par rate who has 3 borrowers going in on the same deal and none of them win.
That's my background, cap markets guy. And I remember these climates like this, I would just dread every time my phone rang, and it's a tough climate, lock extensions, it just all that. It is fighting to win deals, and it's tough. And we'll see what happens. I think rates are going to be incredibly volatile this year throughout the course of the year. And the value of a good capital markets professional like yourself, Vic, that's, I always make the comparison on here. It's like a left tackle for a football team, so protect your blind side. Jerry, moving on to you, I want to commend you and your organization. Recently delivered a letter to the president, signed by over 10,000 members of your organization, National Association of Home Builders, just really calling on the organization to take actions to what at this point is a crisis. I've been calling it that for a while. We've got a serious housing supply crisis in America. And listening to you speak in Miami to our members 6 weeks ago or so, it really, really opened my eyes to some of the headwinds that the home builders face in America. And I would just love you to open by giving your general thoughts on the issue as it stands.
Well, I think it's fair to say that what were headwinds have now become the perfect storm. We're looking right into the teeth of it. You have, as you have just discussed, increasing interest rates, both for the consumer and for the builder for AD&C loans. At the same time, construction costs have gone up 21% year over year. Lumber prices have gone from about $385 per 1,000 board foot, over $600. It went up to $1,500. It's come back down and now to about $690 or $700 per 1,000 board feet. But lumber prices are volatile, even when you can even get it. So I don't know how, by the way, they're saying you can see the end of inflation when the supply chain is so messed up that costs are just escalating at every step of the supply chain. How can you say inflation is going to end? I had the privilege yesterday of speaking in New York City to the board of LG Electronics, one of the biggest producers of home appliances in the world, and talking to them about shipping their product from overseas to here and the increased costs of renting a shipping container, more than 300% increase in the cost of renting a shipping container. And then when it gets to the Port of Los Angeles, instead of taking 3 days to unload a container, it's taken 40 days. all that means extra costs, all that means inflated prices. So I don't know where you were seeing it. That's what the impetus was for us to send a letter to the administration. If inflation is going to remain high, if therefore borrowing costs are going to be high, the only way to keep the housing sector functional is to reduce costs somewhere else, reduce regulations, to cut a deal with Canada, which we should be doing anyway, to ensure a lumber supply, and make it easier for builders to build, because right now, you hear the realtors say, we just need more homes, if the builders will build more. Well, we simply can't afford to build more. We can't build a house that a first-time home buyer can afford to buy. And they're the ones, that's the area where we have the largest shortage in supply, is in the first-time home buyer market. We can't make it work. If the administration doesn't heed our warning, I don't see how we avoid a housing recession. We've gone up from saying maybe a 10% chance of a housing recession at the beginning of this year. Our economist is now saying it's a 1 in 3% chance of a housing recession.
Well, one of my favorite things is follow the money, and the way the stock market has performed these last 2 days after Chairman Powell coming out and really doing everything he could to assuage the markets really makes me nervous for my stocks, but just for the American economy in general. Jerry, we talk about it all the time on this show that, I know some home builders, and it's impossible for home builders to build like a $250,000 home and make money. Matter of fact, they probably would lose money building a home that size, right? And I guess that's part A to the question. And part B would be, from your perspective, is there something that Congress could do to help inspire your members to be able to build those smaller homes that the country so badly needs?
Well, right now, the average home price in America is like $385,000. It is very, very difficult. In some parts of the country, it's impossible to build a house for that price. So we're at a point where the average American can't afford the average priced home. That's a bad place to be. What can Congress do? Well, right now, it doesn't appear that Congress has the political will to do anything, unfortunately. They're so polarized up there that I just don't see any help coming from there. The administration can do a lot. This administration has reinstated almost all of the regulations that President Trump vacated. And if they would at least look at some of them and take them off of the table, you can help reduce costs. 25% of the cost of building a new home is in regulatory compliance nationwide. In California, in San Diego County, 55% of the cost of building a home is regulatory compliance. The administration can reduce federal regulations and can use HUD money as a carrot to reduce state and local regulations and get state and local governments to ease back. That's number one. Number two, fix the supply chain. When I talk to my counterparts at the American Trucking Association or the Railroad Association, the same type of regulatory burden that's been placed on builders has been placed on the transportation industry as well. That needs to be reviewed, and reviewed quickly. And lastly, we need to get people working back on the docks. We need to get our longshoremen and everybody to come back to work and unload these ships, some of which have been sitting there for over a month at a time before they even get fully docked.
Jody, spent your lifetime in the industry. You've worked for big national banks. You were the COO of what is now one of the biggest mortgage companies in America. You're president of a pretty big independent mortgage bank right now. You live in Northeast Ohio by me, where you could still, in theory, you should still be able to get an affordable home. Your company's based out of New York, a higher price state. I would just welcome your perspective. My fear is what is happening now because of all the things that are contributing to home values that continue to go up, and rents now, landlords, and a lot of these are institutional investors that, there's no sympathy factor there. They want to make money. Rents are going up like crazy. We both know people that you got to live somewhere. And this is really my fear, that if things keep going in this direction, that as soon as late this year or this time next year, it's going to be a real problem for just anybody that just needs somewhere to live. Like the young couple that gets out of college that, you know, entry-level jobs making 40, 50 grand a year, or the single mom. Like, your thoughts on the matter in general and how you see things playing out?
Well, I learned a new term past month, about doom surfing, where we as human beings, we like look at the tragedy stuff, like we're on social media, we're looking at the bad, we're looking at the bad. I want to, this sounds like a doom surfing a call today. Like, it's a great opportunity for people to jump on. And I usually can turn every single thing into a positive, but I really am at a loss. And
That's
I
why I
can't
wanted you on this, Ryan. I figured you'd have a ray of light for us here, no?
I really see, everything that is happening right now, it's scary. I mean, I can't imagine being a first-time home buyer who doesn't currently own a home that has historically high equity to be able to get into another home. I personally am trying to sell, was going to sell my house, but then I started looking at rent and what that meant, in downtown Cleveland. And I'm like, well, that makes no sense. It makes more sense for me to hang on to my house, and because at least I'm paying towards something where I have, am paying towards the principal of my house. So keep two homes as opposed to have, a place in Cleveland and a second home. So I think right now it's like, with increased home prices, increased rates, and in many cases, because investors are scared of the higher interest rates, you can't even get to a par rate. So you're telling people that don't typically have the ability to have a large down payment that they also have to pay 3 points, or the programs that are intended to help them for down payment assistance. Like, it doesn't make any sense because all of the money is being sucked up in discount points. And you also are, with increased cost to originate, all of those costs are going to the consumer, right? It's like, and so it's like, I don't know. And Victoria said the last 2 years in the mortgage industry, like, you couldn't have told me that this is what we would be talking about 3 years ago. You couldn't have told me that we were going to have to deal with a pandemic. We were going to have to deal with another housing crisis. It's just of a different variety. And I don't know where the end is for the consumer, and especially creating affordable housing for individuals. Like, I just, it's sometimes you get to a point where it's like, it feels as though it's unsurmountable, and it's going to take a whole lot more smart people than me to try to fix that. Where I can, as a mortgage lender, where the only place I can really provide impact is, the willingness to share in losses, with our branches, to be able to keep rates as low as humanly possible, to look for ways to be more efficient, to drive down the cost to create a mortgage loan. I think I saw it was like over $9,000 is what the average cost is to for a loan. I mean, so the only things that we can do are, the things that are within our control, and it is, there's a lot of moving parts. And I heard that it's going to take a whole lot of luck and precision from the Fed to keep us out of a recession. I don't know if we have a solution to keep us out of a recession. So there's my doom and gloom happy version of what's going on in the market.
I'm going to add a little bit of a ray of sunshine to this. And I wanted to go back to Jerry's comment about how it's really going to take state and local governments to help on the affordable housing front. And so I also happen to be the president of the Michigan Mortgage Lenders Association for 2022 this year. And we're working pretty closely with the administration here in Michigan to help on that front. And Governor Whitmer actually just came out with a proposal in order to help in that fight, and partnering with MSHDA here. So I think if we can continue to get other state and local governments involved in that, I think we can start to solve it on a local level, and then, work with our friends like Jerry on the national level to help get this problem solved.
This is the Rundown with Rob and Rich. I'm Rich Swerbinsky of the Mortgage Collaborative. This week, joined by the President and CEO of the National Association of Home Builders, Jerry Howard, President, Nationwide Mortgage Bankers, Jody Hall, and the Executive Vice President, Capital Markets for Princeton Mortgage, Victoria DeLuce. Jerry, a question in the chat about 3D printed homes. You're starting to see a little bit of chatter about this. Is this anything that is any realistic part of the solution in the short or even medium term?
It's great to see the technology improving, not only in 3D printed homes, but in other elements of home building. But it's going to take time before the market fully accepts all that. You got to remember that the basic home is still being built largely the same way it was when the Pilgrims landed in Plymouth Rock. The nail gun is a revolutionary tool to some people still. So it's going to take a while. But having said that, it is great to see, necessity is the mother of invention, and we need to find something. And so we're starting to see more robotics. We're starting to see 3D printed housing. It'll come, but it's not going to help us in the near term. No, I don't see that.
Something that may be able to help. I heard you mention at our conference, just our trade deal with Canada, tariffs on timber that we import from Canada, and that being a big part of why lumber prices are so expensive in America. If you could, explain that in somewhat simple terms, what the heck's going on with that?
Sure. We traditionally have relied on Canada for 30% of our softwood lumber. Softwood lumber being the lumber you use to frame a house. Now, first of all, we could domestically produce enough lumber, but radical environmentalists have driven our policy so far to the left that national forests are treated the same as national parks. National forests are not national parks. National parks are treasures that should never be touched. No one disagrees with that. National forests are established to be renewable resources, but right now there is no harvesting in our national forests. And by the way, that's not good for the forests either. I learned at a forestry summit a couple of years back that a healthy forests in Germany and Sweden have 100 trees per acre. Our national forests right now have 300 trees per acre, which it means that there is disease, there is down timber in the forest. They become tinder boxes. Oh, and by the way, we're starting to have more and more forest fires every summer. That's a significant part of the reason. So first, we could clean up our own forests, do ourselves an environmental favor, and produce our own lumber. But that seems to be off the table right now. So then we need to go back and get this timber from Canada. We've always had a trade agreement with Canada on softwood lumber importation. It's been expired now for 4 or 5 years, and it seems like the American government is very reluctant to come to the table because the domestic producers are really controlling our policy in that front, and the domestic producers have a good thing going right now.
Jody, how housing, it's becoming such a Main Street issue. You touched on it well in your last comments. How big of an issue do you see housing related items being in the upcoming midterm elections? Any thoughts on things that could begin to become talking points there? Your thoughts?
I think that if someone can, their magic 8 ball lands a great idea to help with that, with housing, I definitely think that we would all jump on the bandwagon regardless of what the party is. But I really don't think that there are any candidates that have a solution, or I should say the willingness to put their neck on the line for what a solution could be. So disincentivizing investors to buy up affordable housing, providing ways to get first-time home buyers into homes, opening up, we have a large issue with the area to build, right? So the state our local regulators have to have the willingness, which won't be popular, to allow, higher than normal buildings for, or just to open up land to allow for building in areas to be able to grow. So I don't think that, I think that typically, if it's a no-win solution, what do politicians do? They leave it alone. So I think that most politicians are going to steer clear of it unless they have some big, hairy, audacious idea that is going to solve supply chain issues. But when you talk about being a New York company, it's built on, like, you can't, on Long Island, it's like there are houses, you can touch them everywhere. So there's no place to build. You look at Cleveland, and we have the ability to expand because we can go into our suburbs, and we've seen that happen a lot over the last 30 years, and expanding what the Cleveland footprint is with all of the suburbs, and now stretching further south into Akron and Canton with home building. But I don't think a politician is going to be willing to put their neck on the line and risk reelection, because they'll just avoid it. We'll blame the person that, if someone does have an idea, whether it's a great idea or a bad idea, we'll say they'll all jump on like attack ads to go after that person that might be trying to solve a problem, but they're not going to come up with some solution themselves. So I think that it'll be completely avoided in the election.
Much politically safer, than creative solutions,
And Rich and Jody, that's really sad, because the last time our country holistically examined our housing policy was 1990. It was called the Cranston-Gonzalez Act, and that's the last time we had a housing bill. Since that time, you had the crash and Fannie and Freddie go down. You now have housing affordability problems. You've had problems with virtually every single program, and people look at them piecemeal, but they don't look at our housing policy as a whole. You would think, and you guys know this better than I do, that the technology advancements alone since 1990 would dictate that we ought to look at our national housing policy. And yet no one has the guts to do it. It's very unfortunate. And I think it's very poor government.
I did see today.
You can't really blame anyone though, right? It's like, I can't imagine being a politician. It's like, you're under so much scrutiny and, running a small mortgage company. Imagine trying to run a state or run a national government. And it's like, nothing you can say will ever be right, will ever be popular. It's like, people want to criticize when someone wants to make decisions and try to change something, as opposed to help them in making the right solutions for all of us. So,
well, John F. Kennedy wrote a book once called Profiles in Courage. I haven't seen too many people running for office that would be candidates for that book in the last few years.
And that's part of why I'm terrified, because the solutions needed for the very complex issues that plague housing are they're going to require incredible creativity. They're going to be difficult, and there's going to be negative connotations to them, no matter what we do. If it's incent Jerry's builders to build small homes, there will be negatives to that. I don't know off the top of my head what they are, but I'm sure there will be, or else they wouldn't have done it. They would have done it already. If you disincent investors from buying homes or incent them to sell them, there will be some negative parts to that as well. So, and to both of your point, there have not been a lot of profiles in courage politically, and we are in a very divided political climate, which makes it a little nerve-wracking. So we've got about 10 minutes left. A lot of good comments in the chat, and feel free if you have any questions or comments to pump them in there. Get a chance to get them in before the show ends. Vic, I'm going to go to you on here. One ray of light is the emergence of more tax-exempt bond programs with below market rates. It'll take strong operational support for lenders to meet the IRS regs, but could be a game changer for those willing to invest in doing it right. Any thoughts on that?
I do. I think that bond programs are actually a really wonderful thing to offer borrowers. The only issue is, in a primarily purchase-driven market where top-notch conventional deals are getting turned down to cash deals, it makes it far more difficult to get a bond program or a DPA accepted. That's kind of the thing that we're up against right now. I do think that it's definitely something that everyone can leverage in the future, but there's a lot of operational cost and risk associated with that as well. And then Rich, there was another question about non-QM and how can banks and IMBs be successful with that? My personal take on that, especially from the IMB perspective, is if you are going to offer non-QM, to offer it on a broker basis, which is not always popular with your loan officers. But I think this goes to say that us mortgage bankers have really, really short memories. And as soon as the pandemic hit, what happened in the non-QM market, not to jump in so quickly just because, you know, we have volume that's drying up. Because if we see something happen, or, you know, inflation doesn't do what we think it's going to do, or things get really weird again, which we've seen several times over the last couple of years, you just got to have in the back of your head that risk perspective. So one of the things that we've done to help with that is also partnering with some local community banks who are open to purchasing kind of one-off products that we aren't necessarily comfortable originating ourselves, or, you know, don't have the risk appetite for.
And I want to add to that, because we did a lot of non-QM. So we had a little bit of stomach ache from the pandemic and the investors backing out on loans that were funded, and we're sitting on the warehouse line and trying to, you know, beg Wall Street investors to buy those loans. So as we started to see the uncertainty in the market arise, we went from delegated non-QM underwriting to non-delegated non-QM underwriting. And even on a non-delegated non-QM underwriting, we got loans all the way to clear to close and ready to close. And then the investors like, we're not buying that. And it's like, wait, like you did this, like, this is all you. And now you are scared of the, you're scared of what the investment could present to you. So you're going to back out on a deal. And so if anyone wants to get into the non-QM space, I agree. I mean, I still do them non-delegated, but you have to really manage your risk, and you do not want to be stuck with a warehouse line full of non-QM deals if the non-QM investors get scared and run for the hills.
Yeah, and not to mention, just like, you know, Bob mentioned in the comments in the chat here, it is a slippery slope. You know, we have to remember what happened during the financial crisis, and making sure that we're not opening credit boxes up too much, and we're thinking about that risk and all of that. So I know it's tough, but I also think that you know, we're in for a little bit of a natural correction right now as well.
I want to ask a question, if I could, Rich, about the bond programs. Before I came to NHB, I worked for the state housing finance agencies. And at that time, the purchase price limits that were on the mortgage revenue bond program were very restrictive, so restrictive that in virtually no markets could you buy a new home. It was targeted toward existing homes for first-time home buyers. Is that still the case?
Vic, Jody?
I'm not familiar with those restrictions. I mean, from a capital markets perspective, I do know that they don't necessarily pay a whole lot in SRP, and there's limits on what we can charge. So from like a revenue standpoint, they don't always make sense for a company, but we offer it as a service to borrowers. But I'm not sure as far as the caps go.
Because in a normal market, they were seen as a very valuable counter-cyclical tool, but we've never faced a supply shortage like this before, and construction costs being where they are. It's something I'll ask my team to look at it.
Jody coming in the chat said, you know, to Jerry's points earlier about, you know, continued supply chain issues, maybe, you know, challenging the people that think inflation's the worst we've seen. Paper, I hear a new one. Veterinarians, I heard there's a shortage of now, and it's like every day it seems like there's something new that there's a shortage of. And somebody put in the chat, paper. I know you are a very tech forward human and company, and very much more paperless than the mean in our industry. But the comment was along the lines of, if there is a paper shortage, could that finally be the catalyst to get mortgages to it's 2022, we still don't have paperless mortgage. How is this possible?
I know. So every time that there is a hurdle that creates, you know, it lends towards pushing forward. We saw it in the pandemic. We couldn't all be together, so we pushed forward forward on technology. There was a shortage in employees because there was so much refinance business in 2020 and 2021 that pushed us through to higher automation. The same can be true if it'll be all e-closings. I think that's the one area that we're down to that would require paper. But I laughed when I saw that came through because I was in a new branch that had started onboarding them this week, and someone asked for a sticky note, and I went to his computer and I went on and I was like, sticky note. And he just looked at me like, what? I was like, you don't need like sticky notes. You have sticky notes on your computer. Just put a sticky note on your desktop, instead of like, you just wasted like 2 minutes looking for a physical sticky note when you're sitting at your computer anyway. And like, then you have to find a pen, and who has those? Yes, I definitely think if there's a paper shortage, the final piece will come together, and we'll have all of the counties and states accepting e-notes, e-mortgages, all the warehouse banks, investors, and that will catapult us to a fully digital mortgage.
Well, I'll fall in favor of a paper shortage selfishly. So I'm going to start spreading rumors that it's worse than it actually is. So
no more paper cuts.
Right, exactly. Yeah. Dottie in the chat regarding the bond program says income and sales price is not a limitation for the TBA programs being offered by the housing finance agencies, but in the TE bond programs, the limits are generally 115% of area median income. So thank you, Dottie, for that feedback. Jerry, one more question I had for you. Like we've been hearing it forever, just the regulatory costs for home builders being the primary impediment to building affordable homes in America. Like, any examples of some, what you and your members view as a unnecessary, like, are there regulatory costs that could be rolled back that it makes sense and it could have some impact, or is this never going to happen? Any DC inside baseball for us?
Yeah, we could spend hours doing that, but then we'd never get those cocktails, or maybe we'd have more cocktails. I'm not sure. Yeah, there are examples, at the state, at the federal, and at the local level of regulations that have been put in place basically to stop growth. At the federal level, one of the most abused pieces of law in the country's history, I think, is the Clean Water Act, which was passed in order to preserve the beauty and the purity of our nation's rivers, lakes, and streams, but now which is applied to vernal pools. A vernal pool is a pool that appears in the spring after the snow melts, and as the summer comes, it's gone. That is now considered a navigable water of the United States for regulatory purposes, and it's used by people who don't want builders to build. That's a federal one. A local one that I just became familiar with recently is the size of cul-de-sacs in a certain town in a certain northeastern state, rather. The size of the cul-de-sacs have to be as large as they are so that the fire wagons have room to turn around. The town hasn't used fire wagons since the turn of the last century, but they've never undone that regulation. A review of regulations that are not necessary or that are put in place for ulterior motives is something that I think any good government should undertake on a regular basis at all levels, and there's a lot of them.
Yeah, these problems are complex, and it's not just federal. It's, especially on the affordable housing front, a lot of local buy-in that we're going to need to get over the hump. And Jody, a community in Ohio, Cambridge, Ohio, where you're very familiar with, we're both familiar with, a very popular celebrity. Like, they wanted to put some affordable housing in. He's like, listen, you put it in, I'm taking all my money out of the city. Like, in that, it's an easy example because he's a celebrity, but it's an example of impediments and challenges to build affordable housing and create affordable housing for first-time home buyers and people that need it.
NIMBYism is still a very significant problem.
Yeah, fix it every place, but in Cambridge, Ohio. I want that
Right,
to remain
like,
the
yeah,
country.
go
Thank you.
not on my lawn, right? So, well,
Now we have to find out what celebrity lives in Cambridge, Ohio, Victoria, because you and I, it's an inside Ohio joke, I guess.
Just a quick Google. We're not gonna, yeah, but so, well, this was incredibly informative, if a little bit depressing, and ready to have me run to the bourbon counter in my kitchen. But want to really thank everybody for joining me this week. Jerry Howard, President and CEO, National Association of Home Builders. Thank you again for joining us. Really appreciated your insight on the challenges your members are facing, and all the best in trying to get that message across to our politicians.
Thank you.
Jody Hall, President of Nationwide Mortgage Bankers. And I don't know if anybody's done more TMC stints than Jody. We appreciate you greatly. And I love showing off how smart Clevelanders are. So thanks for always answering the bell for us.
Appreciate it. I love it.
And one of our cap markets go-tos on short notice, I was like, scrambling to put the roster together today. I forgot Rob was going to be out, and the last thing anybody wants is to hear me talk for 45 minutes. So we need to go to somebody that can give us some perspective on the Fed and rates, and Victoria DeLuce of Princeton Mortgage, always there for us as well. Thank you, Vic.
Absolutely. Thank you again.
And to our attendees, thanks as always for wrapping up the week with us. We're here every Friday at 3 p.m. Eastern with the Rundown with Rob and Rich. You can find us on YouTube and on podcast, where the majority of you listen. TMC Connect, Apple, Spotify, or anywhere else that you subscribe to podcasts. And until next week, have a great weekend. And next week, everyone, take care.
Happy Mother's Day, everyone.
Happy Mother's Day to the moms. Absolutely.